Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Welcome to the Stock Play of the Day. Today's stock is Jets. That's an ETF that tracks airlines. We'll discuss, should we pass or should we play? Hello, my name is Brian Overby. I'm the Senior Options Analyst with Ally Invest.
And I'm Callie Cox, Senior Investment Strategist at Ally Invest.
All right, Callie. Well, I'm showing a chart of the S&P 500 index. And last week we drew a trend line. I actually haven't even adjusted it. And we did mention that maybe if we could break out above that trend line, that would be positive for the markets. So we had a fairly good week last week. And now we're bumping up against an all-time high again in the S&P 500 index. So what do you see going on this week in the markets?
Well, yeah, Brian, markets are exceptionally boring. And apologies for the audio issues, everybody. And I was off last week. Unfortunately, I have a boot on my ankle because I hurt myself. So apparently, as long as I'm hurt, we're going to have issues with Stock Play of the Day. I'm not sure. But anyway, markets are exceptionally boring right now. I actually pulled a stat today about how boring it is. The S&P is actually heading for its fourth straight gain of less than 0.2% today, which would be its longest stretch of boring since 2017, which, by the way, was a very boring year in the markets. But you probably already know that. I mean, you watch the stock market, you've seen how it stalled out a little bit. And that's kind of par for the course in summer markets. You know, since 1990, the S&P has risen an average of 0.9% between Memorial Day and Labor Day. So the big question is, what can shake things up? Well, this market still looks skittish and quick to sell on bad news. Volumes could also be lower out there over the next few months, which could exacerbate the swings that we see on big headlines. There's also a lot of nervousness out there around the Fed and inflation. And you know what? People could be getting too nervous. What do I mean by that? Well, investors could be overestimating the prospects for inflation, and higher than expected inflation has been a driving force for this market. Just look at commodities and material stocks. It's a big reason why they've rallied so strongly recently. Well, another thing that could shake up the market, we have a jobs report coming out on Friday. And the last jobs report was very underwhelming for a multitude of reasons. It basically showed that the job market recovery was much weaker than expected. And the narrative out there is that there are plenty of job openings, but hiring just isn't happening. It's a very weird economy right now. Economists for this upcoming jobs report have a high bar again, but there is a chance we could see the same kind of disappointment. I think either way, we might see a slightly more noticeable reaction to markets just because the job market recovery and the Fed's plans are at the front of investors' minds these days. And they work together. The Fed does watch the job market for signs that it needs to adjust policy. So that's the connection there. So overall, as you can see, the summer lull has started. But don't let it catch you off guard as an investor. Look for opportunity here, especially if we see investors rotate back out of inflation-friendly stocks if the inflation expectations are seen as an overreaction. And as always, be prepared for a pullback because pullbacks can happen even in healthy environments. All right, Brian, so the TLDR is, not a lot going on right now, but be careful. Watch for what's coming across the tape. So that's the rundown of what I'm seeing. What are you seeing in the VIX?
All right. So now today we have an up market in the S&P 500. Well, actually right now it's flat basically. But we did see a little bit of a run up in the VIX. And I just don't want to be too concerned about that. A lot of times the VIX has a wonky calculation. And when we have a market holiday, sometimes it takes a couple more days to really adjust and get back to normal. But ideally, when the VIX goes up, when we see the market flat or up and the VIX is going up, that just usually means there's more nervousness in the marketplace. But I'm not going to add a lot of to that overall. Usually it has something to do with a market holiday in the VIX. There's some type of calculation that kind of hurts that index, and it takes a couple more days to adjust back to normal. But good signs as far as the VIX is concerned. I have the August futures contract that's trading at around 22. We got the July futures contract trading around 21. And going all the way out to September, we're 22.68. So the futures are finally starting to come down and trade almost equal with the spot or the actual VIX index. So some of that nervousness is subsiding as we go further out in time. To see the futures contracts come in overall is a good sign for the marketplace going into the end of the summer in general. So with that said, well, let's talk about today's stock. The ETF JETS, right now we see it's up 23 cents on the day. Let's hear about JETS, Callie.
Yeah, Brian. Well, let's talk jets. And literally, we're talking about jets today. That is airline stocks. So JETS, ticker JETS, what you expected, is a popular ETF that tracks the biggest airlines on the market. We actually have Ally's profile page, and I know Brian is scrolling through it right now. This is Ally's profile page of JETS up here. And as you can see, the top holdings are basically the biggest US airlines, although we do have a few airline part makers and international airlines in there. Fun fact, there's no Boeing. Brian and I found that out right before the call. So if you're looking for some Boeing exposure, this isn't it. So why are we talking about airlines today? Well, summer is upon us, like we mentioned earlier, and many of us are getting back to traveling. We can see that in the data too. TSA activity has consistently picked up since February, showing that more travelers are making their way through airports. TSA throughput is still down about 25% from the summer of 2019. Why? The COVID pandemic. But it's picking back up quickly, and we expect that to continue. And if we're talking comps, JETS, the ETF, is trading about 15% below its peak of summer 2019 as well. Although I will add that there's no clear correlation between that and TSA data. So if you're a trend investor who watches for real life opportunities, which is a legit way to invest, this might sound like a dead ringer for you, but it's not quite that easy. Airlines are a really tricky space right now. They've benefited from the post-COVID recovery and strong consumer spending, but the companies themselves are in pretty bad shape financially. Many are still unprofitable, and they've operated off a steady stream of government bailouts since the COVID pandemic started. So while the major airlines seem to be chugging along, sort of, in the shares, we could see a wave of consolidation or financial distress across the industry in the next few years. The chances are just higher of that. Plus, many airlines report earnings at the end of July too, and this last earnings season wasn't too kind for them. You know, thinking about JETS' top four holdings, you have American, United, Southwest, and Delta. All of them fell after reporting results in April, and all of them reported a loss in their last quarterly earnings report. And to make things a little bit tougher, if you're getting into travel stocks now, you might have missed the first leg of the recovery. JETS is up 22% this year compared to the S&P's 12% gain. And lately it hasn't done much of anything. But, you know, overall, long term, there could be more gains ahead, especially if summer travel encourages investors back into these stocks. You know, from our end, it might be prudent to look at a fund of several stocks instead of an individual stock if you want to catch this recovery trend, because it's tough to say what the fate of each company could be. Hence why we're focusing on JETS, the ETF, and it's a really fun ticker. So Brian, we're going to look short term here. We need an options trade that's bearish in the short term because JETS might have some trouble taking off from this point. So I want to hear what you have for us there. But before I pass it over to you, I'm going to remind all of our viewers to drop your questions in the chat, because we will be answering them live at the end of the show. And we promise, we hope our audio will be working when we answer them. So Brian, tell us about what you're seeing in options.
All right, I saw what you did there on the takeoff. I like it. Well, with that said, looking at the chart, we do have a little bit of resistance right now. And as Callie mentioned, more long-term bullish in JETS, but in the short term, we're gonna actually just do a real simple strategy today. Ideally, when I first talked to Callie a little bit about the stock today and the ETF, I guess, to be a little bit more exact, I talked about selling a cash secured put to buy the stock if the market did go back and start trading within this channel, back within this range. So we would target something down around the 25 level. And that cash secured put would say, well, if it gets down to this level, we'd be willing to buy some of the underlying stock. Now, when I got too far into it, I noticed that implied volatilities have really came off in JETS. As a matter of fact, we're at the lowest point since the pandemic as far as volatility is concerned. Now, that goes a little bit hand in hand with what the VIX is doing recently, but we're way down, like quite a bit lower than we were even 6 months ago on implied volatility. So to me, I don't really want to sell that vol. I don't want to sell that premium. I would rather go out and buy it. And considering just the fact that a lot of the companies that are in JETS have already announced earnings, volatilities are down a little bit. So to start with, we're just going to do a long put. And that's going to be the strategy for the day. So it's going to be very simple, very straightforward. We see a little bit of resistance in the market. We're kind of hoping that we get a little bit of a down move down towards, and I'm going to jump back to the chart real quick, right there it is, down towards this 25 level. We're up around 27 right now. A couple of points moved to the downside. Now, if we did break out on the downside here, that would be a fairly bullish charting pattern. If we could break through that support to the downside, then our next range is down around 23, 24. But right in here, I want to set an alert, see what's going on with the marketplace. So we're going to do a shorter term strategy, kind of looking for the moves. Hopefully we hit some resistance on the upside, get a little bit of a down movement overall. And the plan would be over the next couple of weeks to be out of this trade, just in general. All right, so we're going to manage our risk. Like I said, the options are fairly inexpensive. So we're just going to manage our risk by buying a fairly inexpensive option contract. I'm going to err to going out further in time. I'm not doing a spread. I'm not doing anything where I'm selling something. So if I'm just outright buying an option contract, I would rather buy more time than less time, just to give yourself time for the strategy to play out. And on top of it, then you get a slower rate of time decay. So we're going to go out to the July 16th expiration, which is 45 days away. Stock right now is at 27.09. The simple paper trade for this week, and as always, it's not meant to be a recommendation, we're just trying to learn here, is going to be buy an at-the-money option contract, limiting our risk. For 45 days worth of time, we're only paying $1.16 on the ask. Now, the puts are on the right-hand side of the chain. I should probably highlight that. And inside the Ally Invest platform, all we do is just check the box over here on the right-hand side, and it puts it down in our options strategy workbench. So we're getting a good bit of delta. We got a 50 delta on this. That's 46 to be more exact. And then we're going to be looking, we got a good market, and JETS has really good markets on their options overall. 111 by 116. We'll just buy this one on the ask today, actually. We're going to pay the 116, not try to grab a couple of pennies. So now it's in the right rail. This is the official paper trade for this week. We're going to be buying the open, the July 16, 2021 strike. July 16 expiration 2021, 27 strike put, paying $1.16 for it. And don't forget, that's going to be our maximum risk, that $1.16 or $116 plus commission. We're looking to get out of the trade in a couple of weeks' time. If it just kind of hangs around and doesn't do anything, well, that's all right. But we're looking for a move down to 25 and maybe lower if we can break through that support on the downside overall. Ultimately, going into the travel, if we do get that move to the downside, I think there might be a buying opportunity in it. So you could either sell a cash secured put or maybe just buy the stock outright, as Callie was mentioning earlier. So with that said, I see the questions are kind of lining up here in the chat box. If you have any questions, we'll be happy to address them overall. And I'll pass it back to you, Callie, so we can get started on a lot of these questions.
Yeah, Brian, let's get started. Thanks for running us through that put buying strategy. All right, so let's see. I have a question from Joanne, which is a really good question. Hi, Joanne. Thanks for asking your question, by the way. So Joanne asks, do you prefer jets to individual airlines? And I can take this one, Brian. So it's a really interesting question, and I touched on this a little bit in my earlier spiel, but right now at this point in time, if you want to make the play that we're talking about, if you're looking at the play that we're talking about, like the macro play on airlines and the post-COVID recovery, Jets might be a more reflective bet on what you're kind of looking for. Individual airlines, they're all, they're not doing great right now. If you look at the stocks, they're doing fine. But, if you look at them financially, they're all in pretty rough shape. Many of them are unprofitable. Many of them are sitting on loads of debt. Some have had to, renegotiate that debt. And, with an industry that's had it as hard as the airlines, I wouldn't be surprised to see, some consolidation or, some financial strategic moves happen in the airline space, as things go on. Kind of similar to what we saw after September 11th, honestly. I don't know if it'll happen to that degree, but it'll be something similar where we see, maybe airlines buying other airlines and stuff like that. So that's a lot of single stock risk. Especially because a lot of that stuff is a surprise. I mean, generally, you don't know when one company is buying the other. So I would say maybe step out there, and if you want to make this macro play, take a position in Jets, either bullish or bearish. We're talking about put buying here, but there is an argument for Jets to go higher from here as well. So that's just kind of how I approach it. Individual stocks are looking a little too risky in the airline space right now. So maybe get an ETF with hopefully some winners and some losers in it. All right. So I hope that helps. All right. So I have a question from Wayne. Hey, Wayne, good to see you this week. All right. So Wayne says, hey, Callie. Really excited, Wayne. He says, Brian, I have a general question this week. If you have over 10 plus options positions, would you try to manage them individually or altogether as a portfolio?
10 plus okay. Well, Wayne, if I had 10 plus option positions on 10 different stocks, yeah, you're going to have to manage them. Like if you're getting into an option trade, one of the biggest things that you want is to have a plan. You want to decide, all right, just like we just did right now, we're buying a long put. We see a little bit of resistance in the chart to the upside. We see a channel where it's been trading between 27 and 25. And the more times it actually comes back down to that 25 level, the harder it is for that support to actually maintain and hold that position. So that's part of the reason why we're getting long the put. But that's our plan. In general, this is what we're looking to do. We're only paying $1 for the option contract, and we're managing our risk by buying at the money option contract in general and not paying too much for it. And the reason why we're doing that is because implied volatilities have came down on Jets quite a bit. As a matter of fact, they're at a 1 year low as far as implied volatility is concerned. So with that said, that's our plan. And that's how I would always approach it if I had individual options on individual stocks inside my portfolio, just in general. And then that kind of goes hand in hand with what Ed said. Ed was saying he wouldn't touch it. Well, yeah, we're getting bearish on it, Ed. As a matter of fact, if you actually kind of make an argument for us to buy this long put, and I saw that one question that Ed brought in overall. And then just to follow up with that, Callie, and then I'll pass it back to you, is do we follow penny stocks? No, we really don't. We don't talk about penny stocks on the show. Part of the reason why is that penny stocks usually don't trade options. So that's one of the reasons why. But we always try to stick to the one stock that we're looking at on the stock play of the day for a few different reasons, but we just don't want to get too far off track. All right, Callie, back to you.
Yeah, that's a great answer, Brian. And I'll add too, even smaller stocks that aren't considered penny stocks, sometimes they don't have liquid options markets. So we tend to steer away from those as well, just because we like focusing on option strategies in this show. All right, so I actually have a question for you, Brian.
All right.
So I don't want to cannibalize the overtime show, but let's say that Jets starts rallying. Let's say that it, shoots up a 5% rally this week. How would you adjust that position? Or what would you do? Would you touch it?
Yeah, if we did get a breakout to the upside, you could just close it and get out if you'd like. Obviously, the chart kind of says that if we do break to a recent high, that would be a little bit more of a bullish sign for Jets just overall. So you could close it, try to salvage whatever you want, but we only paid $1.16 for this. So I don't mind letting it ride. I would probably think about, if we don't get the move over, I'd make it more of a time period situation. If we don't get a move to the downside over the next 14 days, I might just sell it and get out just because of that, because obviously our chart pattern didn't really help us much and it's just time to move on. But if we did get a breakout to the outside, just sell the put, buy the stock, get long it if you wanted to, in general. And that's basically just from looking at the chart and trying to pick a time when you'd want to buy and hold the underlying ETF.
Definitely. Gotcha. Thanks for that, Brian. All right. Any other questions? Going once, going twice. All right. So I think that's it for questions, Brian. Take one more look. I think that's it. So yeah, a little overtime plug in there. Check out Stock Play of the Day Overtime on Friday. Brian gave you a little bit of sneak peek, what we could do if Jets rallies into this week, but you never know what's going to happen. We're not sure. So check out Stock Play of the Day Overtime. Brian will go through this trade and how it's doing and how you can adjust it, to possibly, benefit from how Jets has moved this week. It's at 12 p.m. Eastern, and you can check it out right here on ally.com or right here on Ally's YouTube page. Man, my brain is still on vacation, Brian. All right, so I'll let you take it out.
All right. Well, don't forget to click subscribe, ring the bell, and you'll get all the alerts for the Stock Play of the Day Overtime and the next Stock Play of the Day. Thanks for coming, everyone.